We are covering these 8 top big cap stocks with large percentage moves today. While watching bullish price actions, let us inform you our review on DM. Desktop Metal Incorporated is in the headlines lately, and it's a pretty big moment for the company. For those who might not be familiar, Desktop Metal is a player in the world of additive manufacturing, or 3D printing, with a focus on producing end-use parts. They've got a range of solutions for industries like aerospace, automotive, healthcare, and heavy industry, covering everything from the development stage to mass production. Now, about that big news, Desktop Metal just secured a major legal win over Nano Dimension in their ongoing merger saga. If you've been following this, you know that the two companies were in the middle of a big merger agreement signed back in July 2024. The deal was all about combining Desktop's 3D printing expertise with Nano Dimension's additive electronics capabilities, which could have created a pretty formidable force in the manufacturing world. But as things go in business, disputes started to surface, mainly over Nano Dimension's compliance with the agreement. This led to legal action, and just recently the Delaware Court of Chancery ruled in favor of Desktop Metal. The court found that Nano Dimension had materially breached the merger agreement and ordered them to complete a national security agreement within 48 hours. If Nano Dimension doesn't comply, it could be a big stumbling block. For investors, this is a significant development. The court's ruling has allowed Desktop Metal to extend the merger deadline beyond March 31st, 2025, which gives them more time to close the deal. The stock market responded with a bump for Desktop Metal, while Nano Dimension's shares took a hit, dropping by around 18.3%. It's clear that Desktop Metal is in a stronger position now, and with the legal battle behind them, they're more focused on finalizing the merger, pending Nano Dimension's actions, of course. All eyes are on whether Nano Dimension complies. But if this deal goes through, it could really reshape the additive manufacturing landscape, making Desktop Metal a more diversified and stronger company moving forward. Definitely something to keep an eye on if you're holding or thinking about adding shares. Our review on GDHG. Golden Heaven Group Holdings Ltd. is an entertainment and leisure company that's making a splash in the domestic market. They focus on managing and operating amusement parks, water parks, and a variety of complementary recreational facilities. They've got a pretty broad portfolio, offering everything from rides and attractions to gourmet festivals and circus performances. Beyond that, they collect regular rental payments from commercial tenants, such as convenience stores and operators who manage amusement facilities. The company's business is primarily in China, where the demand for leisure and entertainment is starting to bounce back in a big way post-pandemic. Now, here's where things get exciting. Golden Heaven stock is up an eye-popping 94% today. That's an incredibly significant jump in a single day, and it has investors buzzing. So, what's behind this big surge? Looking at the recent developments, it seems like Golden Heaven is really hitting its stride. The company has been focusing on expanding its operations and enhancing its entertainment offerings, which is starting to pay off. The post-pandemic recovery has been particularly beneficial for companies in the leisure and entertainment sector, and Golden Heaven is no exception. With more people eager to get out and enjoy amusement parks, water parks, and unique events like gourmet festivals and circus performances, the demand for what Golden Heaven provides has clearly spiked. One of the main drivers behind this recent stock jump could be related to positive news around their business strategy, or perhaps an announcement about a new partnership or expansion. If they've secured new commercial tenants, launched a highly successful new event, or even expanded into new markets, that could have investors feeling more confident about their future prospects. Plus, the fact that they're collecting rental payments regularly from tenants gives them a more stable and diversified revenue stream, which is a big positive for any business in this space. But while today's performance is exciting, investors should remain cautious and consider the bigger picture. A 94% jump in a single day is impressive, but it can also be a sign of volatility. The amusement and entertainment industry, especially in markets like China, can be unpredictable. Seasonal fluctuations, changes in consumer spending, and even regulatory shifts can impact how well a company performs. So, while today's numbers look great, it's important to watch Golden Heaven's long-term ability to maintain this momentum. That said, it's definitely a company to watch. If they can continue to capitalize on the demand for leisure activities and execute their growth strategies effectively, there could be significant upside potential. Whether you're already holding shares or considering jumping in, Golden Heaven's recent success is something to keep an eye on. It's an exciting time for the company, and if they keep executing well, this could just be the beginning of a strong run. Our review on ZYBT Zhengye Biotechnology Holding Limited is a company that focuses on the research, development, manufacturing, and sales of veterinary vaccines, with a strong emphasis on livestock. They offer a pretty diverse range of vaccines, covering everything from swine and cattle to poultry, and even dogs. With about 44 vaccines in its portfolio, the company is a key player in the veterinary market, providing everything from monovalent to polyvalent vaccines, including some that combine multiple vaccines. Their work mainly spans both the domestic market and overseas, making them a significant name in the veterinary vaccine space. Now, here's the big news. Zhengye stock is up a whopping 41% today. That's a pretty major jump, and it's bound to catch the attention of investors. So what's driving this surge? A 41% spike in a single day doesn't happen every day, and when it does, there's usually some major catalyst behind it. In Zhengye's case, this jump could be tied to a recent breakthrough, perhaps new product approvals, an expansion into new markets, or a partnership that investors are excited about. Since the company deals in veterinary vaccines, it's possible that they've received positive news related to their vaccine development or distribution. With the growing demand for livestock vaccines worldwide, especially as the agricultural sector continues to focus on animal health, any new developments or improvements in Zhengye's product offerings could be seen as a huge win for investors. Additionally, this uptick might be a reaction to positive market sentiment about the health of the agricultural sector overall. As more attention shifts to animal health and disease prevention in livestock, companies like Zhengye are poised to benefit. If their vaccines are seeing strong sales, or if there's been some significant regulatory approval or milestone achieved, it could be fueling the optimism. While today's performance is great news, investors should always keep in mind that a 41% spike can also bring some volatility. It's important to look at whether the company can maintain this growth and sustain the momentum in the long term. With the veterinary vaccine market being so competitive, it will be interesting to see if Zhengye can continue to innovate and expand its reach. For now, it's a big win for those holding shares, and it's definitely a company to keep an eye on, especially if they can capitalize on this positive momentum moving forward. Our review on FBRX. Forte Biosciences Incorporated is a clinical-stage biopharma company with a focus on autoimmune diseases. They're working on their lead product, FB102, which is targeting conditions like graft-versus-host disease, vitiligo, and alopecia areata. The way it works is by targeting key immune system pathways with a CD122 antagonist. On top of that, they also have a patent for a treatment involving bacteria and metabolites for various skin conditions, which adds some unique value to their portfolio. Now, here's the exciting part. Forte stock is up a massive 34% today. That's a huge spike, and it's definitely catching investors' attention. The jump likely signals positive news about their clinical trials or maybe even some movement in regulatory approvals. With FB102 showing potential to treat multiple conditions with a single treatment, it's no wonder investors are buzzing. It's a game changer if they can prove its effectiveness across a range of autoimmune diseases. But while today's performance is definitely a win, it's important to remember that biopharma stocks can be pretty volatile, especially for companies still in clinical stages. A lot can change as trials progress, or as they face regulatory hurdles. Still, for now, This 34% surge is a solid sign of confidence from the market, and it'll be interesting to see how Forte builds on this momentum moving forward. Our review on MKFG. Markforged Holding Corporation is making a name for itself in the world of industrial 3D printing. Their platform, the Digital Forge, combines 3D printers, proprietary materials, and cloud-based software, allowing manufacturers to produce parts right on the factory floor. It's a pretty big deal, especially since their technology spans industries like aerospace, automotive, medical, and defense, offering solutions that can really streamline production in a variety of sectors. Now, about that big stock jump. Markforged shares surged 30.3% this morning, and the reason for this spike is tied to some legal news surrounding their merger with Nano Dimension. To give a quick rundown, there was a bit of a legal battle where Desktop Metal sued Nano Dimension, claiming that the deal with Markforged could undermine their own merger agreement with Nano. The concern was that the Nano-Markforged merger could mess with the Desktop Metal Nano Dimension deal, creating roadblocks for everyone involved. However, Desktop Metal eventually dropped Markforged from the lawsuit, and this news sent Markforged stock soaring because it suggests the merger with Nano Dimension could now go forward without any more legal hurdles. This merger is a big deal for Markforged, especially since Nano Dimension has already offered $5 per share in an all-cash acquisition deal, which was a 71.8% premium over Markforged's price at the time. So, this legal development today is a clear signal to investors that the merger is back on track, and that's a major positive catalyst for the stock. Even though today's 30% surge is significant, Markforged stock has been pretty volatile over the past year. Back in September 2024, for example, the stock shot up 74% on the news of the acquisition deal. Despite today's gain, Markforged is still trading about 50% below its 52-week high of $8.50, so there's room for potential upside if the merger goes through smoothly. While today's spike is great news for investors, it's also a reminder that this is a stock with a lot of ups and downs. The 3D printing and additive manufacturing space is competitive and fast-moving, so it'll be interesting to see how Markforged continues to perform, especially as they potentially join forces with Nano Dimension. If the merger is completed as planned, we could see a more powerful combined company that could lead to greater market share and faster growth in the years ahead. For now, though, it's a positive sign, and investors are clearly responding to the news. Our review on KBSX. FST Ltd is all about golf shafts, and they've made a name for themselves by producing high-quality, reliable shafts for golf brands and manufacturers. They not only do contract manufacturing for steel golf shafts, but they also create their own products under the KBS brand. KBS has earned a great reputation among PGA professionals, and it's trusted by golfers worldwide for its performance and craftsmanship. This has really helped position FST Ltd as a respected player in the golf industry. Plus, they're a wholly owned subsidiary of FST Corp, which gives them solid backing. Looking at their stock performance, things are looking pretty positive lately. The golf equipment market has been steady, and FST's high-quality products are in demand. The fact that KBS shafts are used by pros gives FST a lot of credibility, and that's clearly appealing to investors. It shows that FST isn't just another player in the market. They've got a product that's trusted by top-tier professionals, which can go a long way in building a strong brand. Now, even though the company is on a good trajectory, the golf industry can be a competitive one, with a lot of big names in the space. But what stands out about FST Ltd is that they're focusing on quality and have established themselves as a go-to for custom and performance-driven golf shafts. The strong demand for high-quality equipment, especially in a sport like golf, gives them a solid position in the market. If FST continues to deliver the kind of performance and innovation that golfers rely on, it's very possible their growth will continue. With a strong brand like KBS and a solid market position, they're poised to keep making moves in the golf world. Investors are clearly feeling good about their prospects, and the stock is reflecting that positive outlook. While there's always competition in this space, FST's track record of quality products and their strong foothold in the market make them a company to watch in the coming months. Our review on FUFU. BitFuFu Inc. is in the digital asset mining space, offering a range of mining solutions like cloud mining services, miner hosting, and even selling mining equipment. Their proprietary Aladdin system is a big part of their operation, managing hash calculations and connecting miners. The company serves both institutional customers and individual enthusiasts, making it a key player in the digital asset world. They're all about secure, transparent blockchain infrastructure, which has earned them trust in the space. BitFuFu is backed by its wholly owned subsidiary, FinFront Holding Company. Now, let's talk about why BitFuFu stock is up 22% today. The company just reported a huge surge in revenue for 2024, and a lot of it is coming from their cloud mining business. Cloud mining is really gaining traction as more people and businesses look for ways to mine crypto without having to deal with the complexities of setting up and maintaining their own hardware. With BitFuFu's cloud mining services growing, it's clear investors are excited about the company's potential for scaling up and capturing more market share in this fast-evolving industry. This 22% jump in stock price shows just how much investors are reacting to the positive news. And it makes sense. As the digital asset market continues to grow, companies like BitFuFu that provide essential mining services are likely to benefit. While there's always volatility in the crypto world, BitFuFu's solid growth in revenue and their strong position in the cloud mining market are definitely things to watch moving forward. It looks like this stock is gaining momentum, and investors are feeling good about what's to come. Our review on QVCGA. QVC Group Incorporated, formerly known as Curate Retail Incorporated, is shaking up the world of shopping with its live, social commerce platform. If you've ever watched QVC or HSN on TV or streamed content through their platforms like QVC Plus or HSN Plus, you've seen firsthand how they blend entertainment and retail into one. The company has a bunch of retail brands under its umbrella, including QVC, HSN, and others like Ballard Designs and Frontgate. They reach over 200 million homes globally through TV channels, streaming services, and even social media platforms like Facebook, TikTok, and YouTube. It's pretty clear that they're not just about traditional shopping anymore. They're all about making it interactive and fun wherever customers are. So, why is the stock jumping 22% today? Well, QVC Group just reported an impressive $136 million in free cash flow for the fourth quarter, and that's got investors excited. Free cash flow is a crucial metric for any company, but especially for retail, because it shows the company's ability to generate cash after spending on capital expenses. Basically, how much they have to reinvest in the business or return to shareholders. This strong cash flow performance is setting up the company for potential growth and making it a solid candidate for future upside. When a company can consistently pull in this kind of cash flow, it gives them the flexibility to invest in new initiatives, like expanding their streaming services or upgrading their tech. And in a market that's increasingly looking at digital and live stream shopping, QVC Group is in a good spot to capture even more market share. The 22% rise in stock price shows that investors are feeling bullish about QVC Group's ability to keep this momentum going, especially as they keep pushing the boundaries of how shopping can be done in today's digital world. Please subscribe, give the video a like, and watch more from our playlist. Thanks.